Hey everybody, this is Jim at SP500chart.com. It's about 10 minutes after 4 on January 23rd, 2014. We had kind of an ugly day in the markets based upon some weakness in the jobs numbers. At least that's the way the headlines read. Let me read this to you and then we will take a look. The website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay. Like I said, it was kind of an ugly day. The markets were down at one point in excess of 1%, which really, when you think about the kind of rise that we've been experiencing, that really ain't much. You know, I think one definition of a bear market is when more than 20% is lost, then you consider that to be a bear market. What is interesting to note is we did break this lower brown trend line at the lows today, but as you can see, as the market recovered a bit near the end of the day, we closed just a hair above this rising support line. And I'll remind you too, this line is not it is not a perfect line. And what I mean by that is, and then let me move it here just a bit to where it's as accurate as I can make it. There you go. We got this touch and we got this touch. That's where that line comes from. Basically, these were the last two significant lows that I could see on this chart. And so that line broke. It's been in effect for, what, about 3.5 months? And 1850 did not break again. Instead, we fell back from it. The question, as always, is going to be, how far do we go down, or do we come back and test 1850 again? You know, I don't want to be a perma bull, and I'm going to point out to you what could be a bearish case, and it's really up to you to decide what you want to do with this information. First thing, we should be getting some support. We've got a number of support lines not that far underneath where the S&P is now trading. So in having closed over this line, we may get a bounce. We may have just dipped down a little bit deeper than as we've seen on a few occasions, and it is possible with that close slightly over that line that we could bounce up from this. If we don't, and if instead this line should be here, then that would be a little tiny back test. Then we would still be very, very close to some areas where I believe we should get some support. Now, as I mentioned, there's a kind of a couple of things to look at from a bearish standpoint that I want to point out. And it's kind of funny because these two things seem like they might cancel each other out, but You'll see what I mean in just a second. Here is a resistance line, and here is that last support line that I was telling you about. And what's interesting to note here is that this is in a rising wedge, and we mentioned that a few days ago, that this is being described. All of the action since the middle of last fall has taken place in this rising wedge shape. Now you remember I've got this silly little test that I do whenever I see a wedge shape, and that is to snap a line kind of down the center of it. We'll pick the center back here, and then we'll just pick the center right there, And the idea is, once you get that line centered, you see if there are a lot of touches and a lot of interesting interplay around that line as you get out into this pattern. And I believe when we do that, we do see some of that. So I think that kind of confirms at least some of that wedge psychology in what we've been seeing over the last 2 or 3 months. Let me get rid of that line because I really don't want to clutter this chart up any more than I need to. You might notice some things have gone missing because it did get a bit cluttered. So we've got the rising wedge shape. That is in and of itself a bearish indicator. Now here's something else. If we forget this bottom line just for a second, we also have another trend line right here that really has 1, 2 for sure touches. Maybe we could go back here. I don't think you really can though, because there were no real significant bottoms, and this is not horribly significant right here. But this was a little inverted head and shoulders pattern. This was the head. Then we started to form another inverted head and shoulders that had no right shoulder. This was the head. So this line, I think, is worth keeping on the chart. So what would this describe? If we have this as our support line and this is our resistance line, what would that be for the past 2.5, 3 months? It would be a broadening pattern. And broadening patterns often happen when you're near a reversal. As a matter of fact, some broadening patterns in the past have signified very major reversals. I'm not saying that in this case, but it is possible that in addition to this rising wedge, which has a bearish implication, we also have a potential broadening pattern. So if we were to continue to sell down and then take out this line right here, let's say sometime in late January or even in early February, I believe that would be signaling a move to get down to test the mid to low 1700s. Roughly, I think that would probably signal that the S&P would lose the height of the pattern. Let's just say this. If we measure the height of that wedge at the highest point, if it were to be right here, what we set in the middle of, at the end of December, then we would be looking for a move down to probably about 1720. So that's something to keep in mind. But for right now, as I look at this, again, I just get this feeling that the market went down. It had a chance to really break down in a significant way today. Didn't want to do it. Wanted to stay around here. So I'm going to give it the benefit of the doubt. I'm not going to make a bear call at this point. And if you look also at a 5-minute chart, lo and behold, you see our gap down, then you see this descending pattern, and then we see a breakout over that pattern that initially stopped at our lower broken support line, but then by a fraction we managed to close above it. So with that said, if we're looking at just short-term indicators and short-term probabilities, which I think a lot of us are interested in, if we draw a line between this little bottom and this little bottom, you could very easily make the case that the S&P has a very good chance of at least coming back to backtest this line. If we were to follow through with some strength tomorrow and over the next or into early next week, and we get back up to about 1844, 1845, because this is a broken support line, albeit of very minor significance. We also have our gap right at 1845. So I would be, just in case we do get back over this line in a decent way, I would expect there to be a fight at roughly 1844 or 1845 based upon this line being broken, should now be turned into resistance where it was once support, and then finally you've got the action of the gap resistance that, to remind you what the psychology there is, those that woke up this morning, let's say you were 100% invested in an ETF, SPY, or something like that. You woke up this morning and you gapped down, 10 points right off the bat, and you're going, oh dang, why did I do that? I should have sold when it was 1845. Well, in a few days, if we rally up above and stay above this support line here, when we get to 1845, that you might have a reason to say, well, there's my shot. I missed it here. I'm not going to miss it on the return trip. So, guys, there you have it. I think that about covers everything for January 23rd. Kind of an ugly day. Throws the chart into a little bit of question as far as up or down. It certainly seems to be now a bit more of a bear case, but every time I've said that over the past 4 years, which hasn't been that often, I've been wrong. So let's just see if the market's got something up its sleeve, if it can pull this out. But again, as I mentioned, we've got some fairly important support lines down here right around the 1790s, or even this one in the low 1800s. If these start to go, then it's probably time to say, okay, let's lighten the load here, let the market sort this out. I still don't know if I would short. I don't think I would short this market until we take out a major support line such as this blue line right here, and we're still a good ways from that. That would be right at about 1700 now, and I don't see. Well, we'll. What am I trying to say? We'll consider that if and when we get to the point to where we are getting ready to tag that line. As you can see too on this longer range chart here and here, what do we have? A big rising wedge. But just to remind you, there's plenty of play in between resistance and support in this big set of support and resistance lines. There's enough play for this thing to still move on up and keep going, at least for a while. So guys, there's your video for January 23rd. Thank you for taking time out of your day to watch it. Thank you for your support. Let's see. This was really a close call today. Closing just a hair over that line. Is that significant or is it not? We will likely know tomorrow. Take care.